everybody. So let me do that introduction real quick again for the people that are watching, not live. Obviously, for those of you that are here, you already heard me introduce Whitney Elkins-Hutten. She is from PassiveInvesting.com, one of our preferred partners. You can go to our website to check them out. And again, I apologize, I forgot to hit record, but that won't be the last time. She is here today to talk about hotels, how to invest in hotels for cash flow. It is a brand new asset class for me, so I'm excited to hear about it. And with that, I'm going to turn it over to Whitney, and she'll tell us all about hotels. Oh, you're muted.
Hey, is that better?
Yes, thank you. It's a rough day for a Thursday.
We'll get it together, right?
Yes.
Well, guys, thanks so much for joining me today. We're here to talk about hotels. And a lot of people probably don't think about hotels as an investment for cash flow. And they can cash flow actually pretty darn well. And right now can be considered a pretty conservative investment. I'm going to show you how. But anyways, I am the director of investor education here at PassiveInvesting.com. My contact information is up here if you want to reach out to me. I'll also give you, if you stick to the end, I'll give you some freebies at the end. But anyways, let's launch in. So today we're going to learn why hotels are a great investment. We're going to learn about the different types of hotels that are out there, because it's not just this is not just a one type of category. It's like multifamily, it's like self-storage. There's different flavors that we need to learn about. And we're going to learn about the different criteria when we go about investing in a hotel. Now, I only have so much time today. I'm going to make sure we leave plenty of time open for Q&A. So I'm going to keep it pretty 20,000 foot, 30,000 foot view level. I am happy to dive in deeper with you guys as you're, and kind of let the questions guide us. But if you guys don't know me, this is me and my crazy career. This is the whole reason why I invest passively. My husband and I, well, actually, I started off real estate investing in 2002, living, flipping, and house hacking. YouTube didn't exist back then. I was doing all the work myself, a lot of the work I probably should not be doing. We still have our a portfolio of single family and small multifamily properties that we hold personally, but we no longer do all the work. But it was definitely quite a journey. But it was really about 10 years ago with the birth of our daughter that we realized that we needed to step away from building our portfolio actively and get into passive investments in order to scale. So that's why I love talking about these type of topics with the left field investor crew. Anyways, but today we have over 6,300 multifamily units, actually residential units in partnership, both active and passive, 1,400 self-storage, 9 car washes, 1 hotel, and a partridge in a pear tree. We are constantly adding things to our passive portfolio, and even things outside of real estate. And really what this has allowed me to do is to have 100% freedom of choice on how I spend my time. And that's what I love educating people on, is how can they use real estate, more specifically passive real estate, in order to achieve the 5 freedoms in life. Freedom of financial freedom. I know that's what most of us are probably initially here for, but it's the freedom of time, freedom of choice, freedom of location, and freedom of impact after that we get to kind of pepper in. So I love talking about all this. Now we're going to talk about hotels. I don't know how deep we're going to get in the numbers today. We can certainly do that. But right now, I just want to, I have to put out a disclaimer. Everything we talk about today is for educational purposes only. Nothing here is financial advice, legal advice, or tax advice. So before you go into any investment, make sure you consult with your team. If you don't have a team built, let me know. I'm like Jim, I can definitely help connect you with people in the industry. So I like starting with why, right? Anybody's ever read Simon Sinek, always start with why. Like, why should we consider hotels? Well, right now, hotels historically have been a solid investment. But right now, COVID-19, as we know, really impacted travel in the hospitality industry across the board. Now, it impacted the different types of hotels in a very different way. So not all hotels took a big lump with COVID-19. However, what we are seeing are depressed valuations, lower T12s, and overstretched management, nationwide. So there's a unique opportunity here, probably in the next 6, 12, 18 months, to really pick up some of these undervalued hotels. as they continue to rebuild from the COVID-19 pandemic. And really this is what we're trying to do, is that we're looking at the recovery of the business and consumer travel. And we're just really trying to capture the returns and the upside over the next few months. So as I already mentioned, not all hotels are the same. There's different types of hotels. Let's first start kind of defining, and I'll tell you like where I love looking in the various criteria where I love kind of being. But hotels, you got your full service hotels. These are going to be your conference centers, your wedding venues, your large resorts. You have your limited service hotels. These, are probably going to have maybe they're not going to have a spa on them. They might have one restaurant, one bar, maybe a tennis court, maybe a basketball court or a pickleball court now. They're not going to have a whole wealth of services on the hotel, but they'll probably be in the area that, there's services nearby. Then you're going to have your budget hotel, which has, still a high quality hotel, but has no services on the premise. Okay. They might have maybe, a hot breakfast that you can grab and go in the morning. And then you've got your motels. Now, generally zero services, in these type of scenarios. Now, we love being in the limited services space, for a couple of different reasons. And also the space really didn't take that many lumps during COVID. But in this space, there might be one bar, there might be one restaurant, maybe a coffee shop on the premise, and that's about it. So there's really not a high interaction. And there's just enough services on the premise for, the people who stay there to get their needs met. However, there's not a high amount of interaction, so people were still willing to stay in these type of hotels. Now, you guys are very familiar with these type of hotels. These are going to be like your Holiday Inns, your Marriotts, and stuff like that. All right, now before I move on, let me go back. The type of hotel that took the biggest beating during COVID were your full service hotels, your conference centers, your wedding venues, your large resorts. Those are not things that, there's probably good valuation there, like, depressed valuation there, but those also have a higher business risk associated with them because so much of their revenue is driven from the actual services they provide rather than just the hotel, renting the hotel room itself. They're a more complicated business. Another thing, so not only what type of hotel do you need to consider, you need to consider the market. Probably sounding a lot like valuation of multifamily here, but we want to be in a very strong market. So we want to look for markets where the population is growing, because when a population is growing, there's going to be more pressure on rental rates. It's going to drive rental rates up, not only in the residential housing space, but also in the hotel space. We look for markets that have strong blue chip markets. We're looking for Fortune, 500, 1,000 businesses to, have their headquarters in the area, or at least a satellite headquarter. And whenever you have the confluence of these two, the population growing as well as the industries growing, this will spur tourism. Okay, just naturally, whether there's actually a big event happening in the area or not, just people are going to gravitate to these areas. So you're going to think, towns like Raleigh-Durham, Charlotte, Tampa, those type of areas, right? Denver, metropolitan service area. Those are going to actually help, drive the what we call the daily average rate up. All right. So now we've gotten to we looked at the type of hotel. We're looking at the type of market. Okay, you can be successful in almost any market with a hotel. However, especially if you're investing passively, you want to make sure that there's all these investing cards stacked in your favor and that it really helps shore up the business plan. So I know of operators that are investing in, budget hotels and tertiary markets. It's not to say that it's a bad investment, but when I'm investing passively, I want to make sure that I've got a solid base hit and my capital is less at risk. So I like having all these investing cards stacked in my favor. Now, when we get down again, to the, we've got the various components, the type of hotel, the market we're in. Now we're looking at the person that's actually visiting the hotel. Now it's much like a tenant on your multifamily property. we're looking for hotels that have, or at least for me, I like looking for hotels where there is a business travel component. Now that hasn't fully come back from COVID-19. You know, business travel hasn't ramped up. It's been challenged with high gas prices. It's been challenged, you know, just for myriad reasons with, you know, conference travel, meetings being canceled, you know, the various variants still kind of coming and going. But over the next, like, you know, couple years, as we, you know, really fully open back up from the COVID-19 pandemic, that business travel will continue to tick upwards. What's really shoring up the hotel right now is we're looking for the destination traveler, okay? Now, I don't know about you, I might not have jumped on an airplane and gone to Europe during COVID-19, but I surely jumped in my car and traveled across country and was totally fine staying in a hotel. So I'm probably like my own customer here, but we're looking for destination travel, you know, that we're looking for where that destination traveler is going. And so, you know, when we look at our underwriting criteria, we're looking for population centers that have about 30 million or more people within a 300-mile radius. So for context, we have a deal where a hotel deal in our portfolio where there's 35 million people that live within a 300-mile radius. So that's just one, okay? It's, you know, how many people do you have in the area that you could possibly service? But how many people are actually coming there specifically for destination travel? You know, in this particular market that, you know, we have a deal in, we have you know, the average visitor rate for the past 2 years during COVID was 2.9 million. So that's our potential customer that's coming into the area. So when you're evaluating a hotel deal, you want to know how many people are possibly could be serviced within the area, you know, within 100 or 300-mile radius, but more importantly, how many people are coming to that destination specifically for travel, destination-like travel. Now there's one level down that you need to understand is what can that visitor afford? What is the income of that visitor? And that's a little bit more nebulous number to kind of pin down, but we actually look at that number as well. We want to look at the average income of that visitor that's coming into the area, and the different travel bureaus, business bureaus actually keep track of those statistics. And so we can actually see, you know, that it's essentially what would equate to the average household income in a multifamily unit. But in this case, we're just looking at the average household income for that traveler to the area. And this will actually help us understand what kind of space that we have for growth with the average daily rental rate. Okay, and that's very important as well, because as like in multifamily, hotels are evaluated on expected gross income. Okay, that, you know, how much you can grow that net operating income, and we want to have plenty of room for that as well. Now there's one other criteria here. I kind of like put it down below because it's really not a hard and fast rule or, you know, fall in your checklist, but you know, there's a question on the table. Do you go for a branded hotel or independent hotel? Branded hotels generally win when it comes to resale, especially if there's plenty of time left on the contract with that brand. So, you know, on our last deal, we renegotiated the branding with Holiday Inn. And so when we go to sell that hotel, it's a 20-year contract. When we go to sell that hotel, the next buyer is going to have, you know, about 15 years or more left on that contract renegotiation. That's very, very enticing for a buyer. But it's not a hard and fast rule, okay? Like I said, it's enticing. Okay, people, it's kind of like, you know, buying Starbucks versus an independent coffee house like in your town. Starbucks has that name brand recognition, you know, especially if you are, you know, heavily catering to that destination traveler. You know, they know what they're going to get at that branded type hotel. But independent hotels can definitely, you know, warrant the exact same consideration. So just make sure that you're taking that into account when you're evaluating a hotel deal. All right, so now we kind of picked apart the criteria. Okay, what type of hotel, you know, we're looking at. We already know that the limited services spaces hotel actually took the least impact during COVID. We're looking at the type of market, I've already kind of got, shared with you my favorite type of market is going to be, where the population's growing, where we've got, good businesses in the area. We've taken a look at the type of visitor at the hotel, preferring right now in this market that we're evaluating a hotel based on destination travel. And if we have a good business component or history of a good business component, that can be like the icing on the cake whenever business travel does come back for that area. All right. So let's dive into kind of like the metrics, just the general buckets on like how I would screen a hotel deal. So when I'm evaluating like the capital preservation component, I always break these down into, general categories. In the capital preservation component, I like having, again, that limited services hotel, that leisure-driven customer with a corporate potential. And I like erring on the side of branded over independent, okay? There's name recognition there. The resale of the hotel is probably going to be a smoother resale than it would be if it was an independent brand. It would have to be a very strong independent hotel. On cash flow component, I would prefer to have a hotel that there really wasn't a whole lot of CapEx that needed to be performed on the hotel, no deferred maintenance. That would be my core asset, especially right now in this type of market. That would be my preference. However, I'm also okay with a little bit of elbow grease and a core plus type strategy as long as the business plan was being mitigated very well. And I put that core plus, very light value add. I don't want to get into a lot of deferred maintenance right now. I just don't think there's really a need to with the cap rates the way they are. Equity growth, the hotel space in general right now, because of the trailing 12 in 12 and 24 financials from COVID, it's an undervalued market. There's going to be another 6 to 18 months of runway to pick up a lot of these properties at a good discounted rate. And that allows us to look for opportunities where we can move the daily average rate to market rate. We can create operational efficiencies on these properties and add additional streams of income, because a lot of hotels had to really cut back on what type of services they were providing. And I'm not talking about like restaurant, bars and stuff like that, but even just like room services they were providing during the COVID-19 pandemic, which all fell onto the profit and loss statement. Now, I had one question here. I know it was a question for me when I started evaluating the space, is what are the tax benefits of getting involved in a hotel investment passively? It's the exact same as if it were a multifamily or self-storage. You get to take advantage of depreciation and accelerated depreciation through a cost-benefit analysis. You can even take advantage of a 1031 exchange at the end. And of course, we don't necessarily want to let the tax tail wag the dog, but that is definitely something to think about, like whenever you were, evaluating where you're going to place your capital. Now, I really like hotels because they are right now a really great inflation hedge. I mean, if you consider this, if you have a multifamily building, each unit could probably be renegotiated, their rents renegotiated on an annual basis. So it takes you about a full calendar year to adjust your full gross income based on inflation. Self-storage, you can adjust your full gross income in about 30 to 60 days because the rents are renegotiated every 30 days. Car washes, you could probably renegotiate every 30 days as well. Hotels, I can adjust rents daily. I can adjust rents during the day. If there was a lot of bookings that came in, I can actually bump my rates up in the afternoon in order to take advantage of the average daily rate, increasing that average daily rate. And also right now, hotels, there's good and I can create interest rate arbitrage on the hotel. You can actually get really good lending on the hotels. Right now, we're looking at private loans. On our last deal, it was 6%. If you consider that inflation, is being reported at 9%, probably closer to 15%. That's really good arbitrage in the space. All right. So last but not least, if you're going to invest passively with hotels, we all know we've got the market, we've got the deal, but it's more importantly the operator. I'm just going to recap really quick. You got to make sure you're investing in somebody that has knowledge of the strategy, has an expertise and track record, has the ability to secure the proper lending for the hotel, can raise the reliable capital pool, and then has a professional team in order to manage the hotel. Now, I'm sure you guys have tons of questions. We did not dive into any sort of like numbers here because I wanted to make sure that we had a lot of time to kind of pick this apart. Also, we didn't dive into management on the hotel, and I would love to kind of share with you who we're partnering with on management. But yes, hotels can be third-party managed just like a multifamily building or a self-storage building. So that is also very, very ideal for a passive investor. All right, Jim, I'm going to just pause right there and see what questions we got.
Awesome. That was great. So if people have questions, they can type them up in the chat, or you can, I think, use the reactions or somewhere you can raise your hand. If you don't know how to do that, like I apparently don't, you can unmute and I will see that. I have some questions. So I guess that's the benefit of being the host, is I always get to ask the first question. And, I guess part of this is, how do we vet the operator? Because we're seeing a few new hotel syndicators come out, and they typically have been similar to passive investing, where they're maybe in multifamily or maybe something else, and then they transition to hotels. So how do we vet that? And also, what kind of experience should we require? Because obviously I don't want someone who's, a multifamily person just jumping into hotels without hiring somebody or getting some education on how to do it. So can you talk a little bit about how do you screen the sponsor and what should we be looking for?
Yeah, so no, that's a fantastic question. I can speak from our experience. We started vetting hotels and bringing on all of our partners. Aileron Management, they are one of the top national chain hotel managers. We actually started partnering with them in late 2018, 2019. We were ready and set to launch our first hotel deal in about May of 2020. Well, we all know what happened in March 2020, so we pushed pause. But we've continued to just, partner with Aileron and, keep data on the space and really evaluate, okay, what type of hotels are faring well, what are not faring very well? How do we balance this out against our business plan and the returns we want to see for ourselves and for our investors? And so we've actually been in the space and partnering with the experts for years. However, it's like the iceberg, right? So by the time you see a deal, there's all this work that has already been done. The foundation is underwater, right? You only see about the 10%. Now, as far as questions that I would ask, it would be the same questions that you would have whenever you are evaluating any operations team for any investment. What is your track record? Like, have you invested in the space? Now, if they don't personally have a track record, the next question is, who on your team does? Like, who's a strategic partner that's involved in the investment that has that track record? For us, it's Aileron Management. It's the top hotel management company in the country. So really get an opportunity to maybe even talk with Aileron Management or, the hotel manager. For me, we did a webinar back in May with Aileron Management, because we knew that was going to be a question of how does this relationship work, and what does the consulting piece work? How does that work, between us and Aileron Management? But yeah, it would make me nervous, and I've seen this too. People that have put out a hotel deal, and then you call them and you talk to them about it, and they're like, "Yeah, it's my buddy's deal. I don't know anything about it." And you're like, "Oh, it makes you cringe, right? It's cringeworthy." But same questions: who's on your team? Who has the track record? Who's the strategic partner? Okay, not just a consultant, but the strategic partner in the investment that will help lead this and make it successful. Who's the third-party management? I don't want to see an operations group try to take on hotel management. That's especially if that's not their area of expertise, or if they've got multiple, verticals that they're trying to promote and raise capital for. So those are just a few of the questions, but I would just run, from there, it's just down your standard list of questions for how to vet an operator.
Okay, great. Yeah, we got a couple more questions here. I'll ask theirs before I ask my other ones, but how do you deal with this is from Brad. How do you deal with the seasonality of hotels? Does this present any issues or benefits?
Yeah, so the seasonality of hotels is, so the hotels do have, in a lot of places do have seasonality. That's why it's really important to look at a T12 or even a T24, right? If you can, you're going to get deeper financials, because you want to be able to suss out how the hotel financials are running over the recent history and the recent months. And that's why we're still seeing kind of an undervaluation in the space, because that COVID-19 disruption is still in those financials, which is a benefit for us to buy things below value. Okay, it's a benefit for an investor if you want to add this to your portfolio to get invested now rather than waiting. Now, as far as affecting net operating income, you want to, and this is a great question to ask operators, is when they're underwriting their deals, what is their, in multifamily, we ask for a break-even occupancy. In hotels, you want to understand the vacancy rate of which they're underwriting the hotel. And for us, we're actually underwriting our, this particular deal, I know we're not talking about a deal specifically, but the one that we have open, it's underwritten at a 45% occupancy. So that's historic lows. That we didn't even see that type of occupancy on the hotel during COVID. And so you want to understand where what the acquisitions team is underwriting. Now that doesn't necessarily, anybody can have like 100% occupancy on the hotel if they drop their rates down to $50 a night, right? So same thing on multifamily. So you want to understand, how does that compare with the average daily rates? Right now, hotel rates really, if anything, are stable and going upwards. They're not trending down. We really didn't even see them collapse downwards that much during the COVID-19 crisis, because if you think about it, a hotel could not afford to service everybody if they slashed their rates in half. Okay, so it's a very different business model. Now the benefit is, if you've got like a big event coming to town, or corporate travel does come back, now you get to raise your rates. You get to also adjust them anytime you want to stay competitive in the market.
Sorry, I was muted and talking again.
Yeah, so Tyson,
Tyson,
silent there.
Yeah, sorry. Tyson had a question. How important is event spaces at a hotel, and is there an income ratio you want to see of rooms versus events?
Yeah, we actually are not looking for hotels that have a lot of event spaces specifically. We're looking for more of that business travel or destination type travel hotel. But every hotel will probably have some sort of opportunity for a meeting room. That is additional income that we aren't factoring in necessarily to our underwriting. We're looking specifically at the occupancy of the room with the traveler. But that goes back to the different types of hotels. And I'll scroll back through here. There you go. I mean, that event space, that's going to fall more in your full service type of hotels. And those hotels did take a really big beating during COVID-19. Right now, we're playing in the limited services space because, just how stable it is.
And can you talk a little bit more about that? Because that was one of the questions I had. If COVID didn't really affect the limited service hotels, but it did affect the full service, it would seem that there would be a better buying opportunity of going for these full service hotels because there's more upside. So can you talk a little bit more about the decision to go with the limited service destination rather than the full service kind of conference hotels?
We wanted to be more conservative with getting into the space.
Okay.
Yeah. We don't know. What happens when, if there's another horrific wave of COVID or monkeypox takes off, I mean, now we're seeing disruption all over again.
That makes sense. Okay. Jake asks, who is the management? Do they have ownership in the deal? How long is their contract? And how many hotels do they manage?
Great. I'm going to refer you, Jake, it's Aileron Management. I'm going to refer you to the interview that I did with Jason Boehm, and I can stop share. I'll go grab that off of YouTube right now. And that will answer, for somebody who's really interested in Aileron Management, our partnership with them, that will answer, 99.9% of your questions. I'm sure there's going to be others.
And the follow-up to that is, how do you spell their name? So I think that'll be an issue too.
So there's the link. It's a part, the aileron, I guess it's a part of an airplane. I was like, oh, okay. That makes sense.
Interesting.
Aileron.
And then we have another question if you're ready.
Yeah, definitely. I can, for those of you who are more interested about the specifics of our relationship with Aileron Management, I can give you all that information. Jason Boehm is the one that, is our consultant there and our partner there. And also, like I said, my whole conversation with him and our founding partner, Brandon Abbott, is on that YouTube link.
Okay, perfect. And then Rob had a question. How do you think about extended stay hotels versus those that primarily serve short stay clients?
Yeah. I'm going to kind of take my hat off, from passiveinvesting.com and put my hat on for just as an investor. Extended stay hotels, I think more kind of, fall into that, not quite, I know, because you don't have to stay there 30 days, but I think that kind of falls more into that mid-short type customer. And they're looking for a value. They're not looking for an experience. And so I think they can be stable income wise, but you're not going to be able, it's going to be really hard to grow the net operating income on those type of properties. A little bit harder to adjust rates too.
That's a perfect segue into another question that I had. What's the typical business plan to the value add or force appreciation? What other income streams can you add or maybe increase if it's not operating the way that you think it should? So what's the business plan and how do you increase the net operating income?
Yeah, so for us on this particular hotel, it's really just working, increasing occupancy, renegotiating the brand contract, and then raising the rates. There's a couple of things that we're doing on, and I'm just going to give examples through this previous deal that we're working on. There was an extensive rehab on the property between 2014 and 2016. And most people are like, check, we don't have to do that again. Guess what? Decorating trends have changed in the past 6 years. And so now we have the opportunity to bring that up to kind of more modern decorations. Now, modern decorations doesn't mean you actually have to gut the hotel, repaint everything, retile everything, nothing like that. So it's actually extremely very light value add. But if we can kind of give it more of that trendy feel, guess what? We can charge more for it. It's very similar to multifamily. Another thing is, can you add additional amenities onto the property that would attract a better value? Can you add a pickleball court or convert a tennis court into a pickleball court? Can you do some small things like that really are not a large capex, but add perceived value to the hotel, the visitor at the hotel? Another thing that we're doing on this particular property is solving a kind of almost like a workflow issue that was on it. We're building out an entire new lobby because the previous owner actually flip-flopped the restaurant in the lobby for whatever reason. And you can see it on a majority part of the reviews. The customers are coming in, they're like, oh, we missed the lobby. Now we got to drive back out there to go to the lobby. So we're actually putting the lobby where everybody's looking for it. And that is just going to, just increase customer experience. We're going to add, different kind of lounge areas and hangout areas in the lobby as well. Just these trends that have cropped up.
Great. And another question from Chuck. What is your view on hotels that have rooms with kitchens or kitchenettes? It seems like this is more desirable since COVID, and guests would pay a premium ADR for it. I assume ADR is average daily rate, perhaps. So yeah, what do you think of that?
It's a different type of customer. Yeah, so kitchens and kitchenettes, I think are worthwhile. In the areas that we are looking in, those are more kind of destination travel. We're not looking to compete with that budget traveler or looking to compete with Airbnb. We're looking for kind of that higher end traveler that has more money to spend, honestly, on an experience, a good relaxing hotel experience. Now, for me, I am not necessarily my own customer in that respect. I have a family and a dog, and it's easier for me to stay in places that have like kitchens and kitchenettes. But I think it's a different type of customer, and we're not trying necessarily to cater to everybody, but we're trying to capture that higher end traveler.
And what are some of the markets that you're in, like specific cities or states? Like, are these all sunny vacation areas that you guys are looking in, or because you're talking about destination travel is the focus? Can you just talk about kind of the markets you're looking for hotels in?
Yeah, so we've acquired our first property. We actually closed at the beginning of September, and that one is in Hilton Head, South Carolina. And so we're looking in like Florida, along other kind of like beachy communities along the East Coast. We're also looking in the Charlotte area, Nashville area, other kind of like major metropolitan destination areas.
And a couple more questions I have, if no one else is going to chime in, because I have a bunch. I have no idea. Like, you buy a hotel, how much does that cost? Is it, I'm sure it's tens of millions, but what's the average kind of size hotel and amount that you're paying? And then another kind of question is, what's the exit?
Yeah, so the exit is going to be, oops, sorry, I was pulling back up my presentation. The exit is going to be to sell to another buyer, largely. These are desirable assets, so much like a multifamily type asset. As far as the hotel size, in this particular hotel, we're looking, we call them keys. They're not necessarily doors, so it's a 153 room or 153 key hotel. And these are valued into the tens of millions of dollars. I'll go and pull up specifically what this one is, just to kind of give everybody a context of that. But it's going to be close to like $90 million. Knowing what our raise is on it.
And what's the financing? Is it typical? I mean, is it similar to multifamily? I know you mentioned 6%, but where do you get the financing? Are there bridge loans? Is it the same issues as people are having with multifamily these days?
Yeah, this one actually, we are, oh my gosh, I don't have my glasses on. They don't look good whenever I'm on the screen, so I take them off. Then it makes it like difficult when I'm reading. So this one, the financing is a little bit different because we actually have to raise more capital to come in. It's going to be about 60% loan to value. The purchase price is about $30 million. And the reason why I say about $30 million is because we renegotiated in order to get additional land for beach access.
Oh, nice. Okay.
Yeah. So, and that's, some of the people here at Left Field Investors, that are, with us right now, they may have seen that deal back in May, but we did a retrade. When, as we were going through the due diligence phase, we're like, hey, by the way, you guys said beach access. There's no beach access. How do we get that?
Right.
So, so the numbers that I'm looking at right here are just a little bit different. As far as, I'm going to pull up the debt piece on it, but we're using private refinancing, and it's 6%. And so it's just the loan to value is going to be a little lower because of just the asset, right, and the stability of the income of the asset.
And are there some brands that are better than others? Like, you're talking about, you mentioned a Holiday Inn. Do you prefer a Marriott if you can find it, or can you switch the branding when you buy a hotel? to something different?
It depends on your contract of the brand. Each hotel is going to have, the different brand standards it has. Holiday Inn, for this particular deal, is very interested on maintaining their brand because it's the only Holiday Inn on the island. That's great for them. It's also great for us. It's a recognized brand. People love it. And, let's just say, I don't know if this as fact, but if we did decide to let the contract expire in a couple years, then we changed it over to a Marriott brand. Okay, you've got all of that CapEx, and now maybe there's 3 other Marriotts already on the island. Now we're competing. We've got that intra competition. So we're not looking to do that. We're not looking to take on that CapEx to switch the brand to a different brand standard, nor are we looking to, arbitrarily create intra competition. So in short, can you switch a brand? Yes, once the contract expires, and whatever clauses are in the contract expire, maybe there's a non-compete in there, for a certain time period. Yes, you could.
So is there a risk from the brand because they have the contract and they have, they're requiring you to do certain things? Can they change their, I don't know what the terms and conditions are in that contract, but can they make changes that require you to spend more CapEx? Or I assume that's all in the contract, but I guess what I'm asking is there some type of risk that you need to evaluate, not only with purchasing the property and all that goes into that, similar to multifamily, but an extra risk because you're dealing with someone else's brand and you have to uphold that brand standard?
Yes, and that's all negotiated up front in the contract. So that's why they're negotiated in chunks, and that's why a Holiday Inn doesn't stay a Holiday Inn forever.
Okay, that makes sense.
So, yeah, and like I said, these are changing hands. Believe it or not, the hotels are changing hands probably once every 7 to 10 years. So there's a lot of life left on these contracts.
Interesting. Okay. Are there any other questions? This has been great so far. I've learned a lot because I knew nothing about hotels and now I know something. So I appreciate that. But we're going to pause here for a minute to see if anyone has any additional questions for Whitney.
Come on, guys.
All right, it's a quiet group today, but I think we've answered a lot. If you have anything in closing, Whitney, and then if not, we'll go ahead and end the webinar, and I will post the recording.
Yeah, definitely. I think when you look at hotels, you have to understand when you look at your portfolio. I just want to leave people some parting tips in a way, at least how I look at things personally. You just have to understand your investing goals. Like, what do you need? Do you need cash flow? Do you need equity growth? Do you need tax diversification? Do you need a blend of all of it, or tax benefits and diversification? I kind of shove those two together. So you have to understand that, and then understand hotels can actually cash flow very well. I mean, you have your initial kind of ramp up year that might be a 3 to 5% return, and then cash on cash after that can get up to 9, 12, 15%. And as we talked about, there are some very seasonality, with the hotels. There's some other things to think about whenever you invest in hotels. And so make sure you understand your goals, what you need from your portfolio. Make sure that you are evaluating the operator with the hotel, the market the hotel is in, and that you're underwriting the deal and just making sure it's a really good fit for your portfolio. I know Jim and you and I speak to investors all the time. They're like, yes, 15% cash on cash return, give it to me. And you're just like, and there's all these things that come with it. Are you ready? If you are, let's do it. So,
yeah. One last question. It's a great question to close on. Are there any other resources, books, blogs, anything to learn about hotel investing?
Yeah. I invite you guys to join. I'll put up the link again here if you guys didn't see it. But I invite you, if you wanted to, join my masterclass, because I periodically talk about hotels. Oh, shoot, I left my presentation somewhere. I'll put that link that you can find me at here in the chat. PassiveInvestingWithWhitney.com. You can just register there. And you'll get access to the masterclass. I do periodic updates on hotels. I'm going to do more training on hotels for people. I don't have a specific book to refer about hotels that isn't dated, because a lot of that changed post-COVID. I think everything that I read pre-COVID, everybody was saying, get into the grand resorts because you have all this opportunity for adding additional streams of income. They're super stable. And then we saw what we saw with COVID. And so I kind of don't like recommending those.
Actually, we got one last question. And this is more specific, I think, to passiveinvesting.com. But from an investor standpoint for hotel deals that you guys are offering, what's the typical like cash on cash return, hold time, just some of the basic deal terms, I guess, that we would be used to looking at from apartments and all that. How does it compare?
Yeah, definitely. And I want to make sure that we're keeping this more kind of a lunch and learn. So if people like want to dive in and look at a specific deal, we do have one open right now. I would love to chat about it. The one in Hilton Head, South Carolina. It will be closing in the beginning of September. You can reach out to me and I can give you all that information. As far as like overarching, we're still looking to do about a 5-year hold. And the reason being is we're going to do a cost segregation analysis and take advantage of accelerated depreciation and bonus depreciation. And there's a reason why 5 years is kind of a magic number. One, because of the depreciation, we've taken anything that can depreciate in 20 years or less, and we've accelerated the first 5 years of the business plan. Okay, once 5 years rolls, that clock expires. Now, we still get depreciation because there are items that don't depreciate out until 27.5 or 39 years, depending on what asset class you're in. But that large chunk of depreciation has been taken. Two, it takes about a year to kind of ramp over branding and marketing, get your plan going, and then start, realizing, positioning the asset for optimal net operating income or expected gross income. And then another about a year, 6 months to a year to get it sold. We give ourselves, 1 or 2 breathing years just in case the market's fluctuating. That's another reason why 5 years is kind of like a magic number. It's just that's what our business plan is. That's very similar for multifamily and hotels. Okay. Now hotels, we're on our deal, we're looking at about a 3.1% first year cash on cash. That's not what we're actually taking in. That's just what we're distributing because it gives us breathing room to get the branding and the marketing strategy going, get all of our CapEx done that we want to do. And then we're ramping up very quickly in year 2 to over 9% cash on cash and higher. Like I said, you can get upwards to 12%, cash on cash in some of these hotel deals. Now, as far as where does that compare to multifamily right now, there's a lot of cap rate compression. You're probably going to look at, maybe a 4 or 5% year one, for a class A asset, comparable asset in the multifamily space. And then you're probably going to get up, maybe 7 to 9% by year 5. So the potential for cash on cash is much larger, I believe, in the hotel space. Also the preferred returns, you're probably going to see a differentiation in preferred returns. We're offering a 7% on our multifamily, we're offering an 8% on our hotels, just because of the nature of the business plan. Just looking at here, I think I got all that on the return piece, but I'm happy to share the deal with anybody if they want to reach out to me individually and we can talk about it.
Excellent. Well, thank you for that. I think that's all we have for the questions. Again, Whitney, this has been fantastic. We appreciate the partnership, the preferred partnership that we have with you and passiveinvesting.com. And we appreciate you coming on here to share your knowledge. And as Whitney said, this is a little bit different than multifamily and the cash on cash might be higher. If it is of interest to you, the lunch and learns, what we do is it's just to present a topic and we're grateful for that. But obviously, Whitney has a deal open. And if you'd like to talk with her about that, I will, I think it's passiveinvestingwhitney.com. And also in the recording, I will include those links so you can connect with her and get more information on the specific deal. So she's not trying to hide the deal. We've talked to her, and this isn't the forum that we want to present it. So, and Whitney at passiveinvesting.com is her email. So thank you very much, Whitney. We appreciate it. And thank you all for attending. And I will send out the recording hopefully later today or tomorrow.
Awesome. Thank you so much for the opportunity, Jim. And I look forward to talking to anybody who has additional questions.
Awesome. Thank you. Thank you, Whitney.
All right.
And thank you, everybody else.
All right. Have a great day, guys.
Bye-bye.
Bye.